Hey everyone, it's Nick with Us versus Herd. If it's your first time here and you like the content here, hit subscribe, hit the like button. I'd really appreciate it. If you want to get more content from us, you're going to get notifications for us, tap the bell. But we're going to get into it. We're going to talk about options trading, avoiding PDT. You know, a lot of traders think that you need to have $25,000 to avoid PDT, which is true. And if you don't know what PDT is, it's the pattern day trader rule. And basically it says you need at least $25,000 in your account to day trade as many times as you want. If you have less than $25,000 in your account, you're limited to 3 day trades per every 5 business days, basically, or 5 trading days. You know, because sometimes they close a market. You know, whatever the case is, it's every 5 trading days. You get 3 day trades if you have less than $25,000 in the account. A lot of people struggle with that because it's like most people. You're probably watching this and you don't have $25,000 in your account. You do like, I don't have the flexibility to get in and out of trades the way I want to get in. Or you might be in a trade and you want to take profits, but you don't want to burn a day trade. You know, you may have day trades available, but you're like, well, do I want to waste it on this? Do I want to, you know, and it's that. Otherwise, if you didn't have that thought, you would just say, I'm going to take my profits. I'm going to collect my profit. I'm going to redeploy the capital. We're going to be good. Bing, bang, boom. But under $25,000, when you have a small account, it's hard. And it's not, and they don't really tell you about everything. Like when you're starting out, you just open an account and you hope for the best. You get a margin account to get all the things. And, you know, to get into it, really, there's 2 different types of accounts. A lot of people don't know this, is there's a margin account and then there's a cash account. And a margin account, I'm going to go through tastyworks. Tastyworks is my favorite brokerage for options trading, along with TD Ameritrade, and we'll talk about Robinhood a little bit as well. But to kind of give you some background here, and they give you some examples here. The typical account that you get when trading options is tastyworks, they call it the works, but it's basically a margin account, as you can see here. You could say stocks, you could do covered and uncovered options, and with like TD Ameritrade and like E-Trade, there's different tiers. Like there's tier 1, then there's tier 2 and tier 3. You know, and it tells you all the things that you can do with options. Some people you can only just buy and sell options. Some people you can sell options or short options. Some people could do vertical spreads and some people can't. And the brokerage, the reason why there's different levels, the brokerage determines what risk level you're at with. That's why they ask you, like, hey, how much experience do you have with option trading? Is it 1 year? Is it 5 years? Is it 3 years? You know, whatever the case is. So, you know, most people, like, tastyworks is the easiest to get a margin account with, to get all the flexibility. With TD Ameritrade, E-Trade, you kind of gotta finesse a little bit. You know, if you're new to option trading. If you're not new to option trading, you're good to go. You're good to go. But if you're new, you kind of have to figure it out. But, you know, with a margin account, you are held under the PDT rule. So you have to, if I were to open a margin account right now, it doesn't matter what brokerage you're with. If I open a margin account right now, yes, I'll be able to do all the things. I'll be able to do all the things I needed. I'll have all the tools available to me. But I will be limited to that PDT rule. If I deposit less than $25,000, or if my account dips below $25,000. Let's say you open the account with $25,000 and you go down a little bit, you're then back under that rule. So if you have anything less than $25,000, if you have $24,999, you're still held under that PDT rule. So just because you deposited, it doesn't mean, like, if you go down a little bit on your account when you first open it, you know, you're gonna have some issues. So you'll be able, the catch is you'll be able to do all the things, but the catch is that you're held under that rule, under 25,000. That leads to the cash account. Now, with a cash account, it says a cash account does not have margin benefits. That means you must be able to cover your trade's full price with the money already in your account, which you can see here. Now, you're like, hey, what does that mean? It means that you can only trade with the cash that you have. Like when you have a margin account, you can open trades, close trades, and you have that buying power back into your account. So let's say, let me get my calculator up here. So let's say you deposited 500. Let's say you have $1,000 in your account, in your cash account. You could do, let's say at $1,000 cash, you could do a $250 trade, right? So let's say I did a $250 trade. and I did a day trade. So I bought it today, I sold it tomorrow, or I bought it today and I sold today. So even if I had a profit, let's say I had a profit on that, I would only be able to use the 750 left. So let's say I made $100. So my account's now, it says my account's now $1,100. I only have $750 a day trade. So the catch is that you're not able to use your full account. You're only able to use the cash that you have, and you have to do something. It's called a settlement period. And if you buy something and sell something, if you buy an option and sell an option on the same day, that cash isn't settled till the next day. So this cash will be available tomorrow. So, I'll only have $750 in buying power. Even if my account says my account net liquid balance is like $1,100, I would only have $750. But you're not held under the PDT rule. You're able to do as many day trades as you want per your cash. You just kind of have to keep track of how much cash you have. Tastyworks, they don't do a good job of doing that. They tell you, like, once you sell an option, it would say you have your full balance available, but that's not the true. TD Ameritrade, Think Your Swim platform, does calculate it for you. So like it will tell me. So even if I took my original $1,000 trade or $1,000 and I turned it into $1,100, but it cost me $250. They would actually show that I only have $750 left to trade. Tastyworks doesn't do that. You have to do the math yourself. But it's all about the pricing, commissions, and all that. So, it depends what brokerage you're with, but you kind of have to check the pricing. And I'll go through the pricing here in a second. So if you have a cash account, I'm going to repeat this again because it's really important. If you have a cash account, you're only able to buy and sell options. You won't be able to do vertical spreads. You won't be able to do iron condors. You won't be able to do anything fancy. So that's the catch. You're only able to buy calls and buy puts. So if that's you can get around the PDT rule. If you have less than 25K and you want to sell premium, you need more than 25K. You're not going to be able to do that. You're not going to be able. It doesn't matter what brokerage you're with. Tastyworks, TD Ameritrade, E-Trade. It doesn't matter. It doesn't matter. So with a cash account, you're able to bypass the PDT rule. They don't care how many day trades you do, as long as you have the cash to back it up. So that's the point. That's it. So if you buy and sell options, just buy and sell calls and puts, you're able to get around that rule. And I'll go through the pricing here real quick, and it's pretty much the same. Tastyworks, you could say, hey, Robinhood is free options trading. But it costs you. You have to realize it costs you money when Robinhood like glitches up. I mean, we've had a lot of problems lately with Robinhood. A lot of traders in our trading group have a lot of problems. If you've been trading on Robinhood for a while, you understand what I'm talking about. But if you're not new, you can if you're new to it, you can Google it. What happened? We're not gonna go down that road. But Tastyworks has the best option pricing. For like a real brokerage. I don't consider Robinhood a real brokerage. Tastyworks is $1 per contract with capped commissions of $10. So like if you buy, let's just go here to one lot on Tastyworks, it's going to cost you $1.20. The 20 cents is like regulatory fees and stuff like that, and you can read all that below here. I'm not going to go through all that. If you open a 10 lot, it's going to cost you $12 versus these other guys. If you open a 25 lot, so they cap the commissions at $10. The reason why it's more money is due to the regulatory fees, the exchange fees. They can't get around that. Everyone gets a piece of the pie, But if you're looking at TD Ameritrade, it's $6.95 plus 75 cents per contract, So for a small account, I definitely recommend Tastyworks. If you want to sign up for Tastyworks, I have a link below. I'm not getting paid from Tastyworks, by the way. If you want to use my referral, if this video helped you out and you want to use my referral code, click my link to my referral code. That will give you my referral code. So if you want to do it that way, that's fine. If not, sign up for Tastyworks anyways. I don't care. Whatever gets you to trade options successfully, do that. So for a small account, I think Tastyworks is the best. When you get to TD Ameritrade and E-Trade, and you can kind of compare the prices here too, how much it will cost you. So for a small account, I definitely think Tastyworks is the best. And also, you can open, let's say you still wanted to sell premium with Tastyworks or TD Ameritrade, you can open two accounts. You can open a margin account to sell premium in there, and then you can open a cash account to day trade calls and puts on, if you want to do that. or have the flexibility to free it out. So just because you have the freedom to day trade doesn't mean you necessarily should. Sometimes you guys lose a lot of money when you're going in and out, in and out, in and out of trades. I know I have in the past. It's best to, but it's also nice to have that when you have a trade on that you want to take off. It's nice to have the freedom to be able to take that off and not like if you're profitable on a trade, you don't want to be like, oh, I don't want to hold this overnight. But I'm out of day trades and stuff like that. So it's a good option. Robinhood, it's free. You're by default given a margin account, even though they don't call it a margin account. You can switch to a cash account, but they won't switch you back. So in my opinion, Robinhood doesn't offer the best support for $1 contract with tastyworks. You can call somebody, you can chat with them, you could email them, and they actually respond. Same with TD Ameritrade. You can call them up. You can chat with them within the platform if you're an introvert and don't like talking to people like me. You can chat with them over a chat box. They'll help you out. And you can actually have them help you close trades out. If there's an issue that you don't understand, it happens all the time with Robinhood traders. I get a lot of comments saying, hey, Robinhood did this or did this or did that. With tastyworks or TD Ameritrade, when you pay for this $1, when you're paying $1 or whatever commission you are paying, you're also paying for the ability for support. As a new trader, you may need that. So if you think about what's Robinhood really costing you, but this is not a video about that. I just want to talk about the PDT rule and how it kind of compares to other brokerages, So, to kind of recap, you can get through the PDT rule by having a cash account. However, you need a cash account. You need cash to back up the trades. You can't just do unlimited trades like buying and selling. You're buying and selling and having the same buying power. That's not how it works. That's how a margin account works, because they lend you the money to cover the settlement period. With a cash account, you need to wait for that option, that contract, that trade to settle in order to free up that buying power again. But they free up in one day. So if you buy and sell something today, that buying power is freed up tomorrow. So if you have a $5,000 account, a $10,000 account that you'd normally be under PDT rule, you'd have more flexibility with a cash account. If you're only buying and selling options, not doing spreads or anything. So I hope that helped. If you like the content of this video, hit the like button. If you want to join the UVH fam, the UVH community, hit the links below to our free options trading group along with our Discord. I'd really appreciate it. If you guys have any questions, let me know in the comments. You can ask on Discord or Facebook. It's a community for everybody. UVH is for everybody. So, whether you're experienced or new, come check us out. You guys all have a great day. Stay safe, stay green. It's always us versus herd.